Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. Let's start with the calendar. Definitely important day for the Canadian dollar. As you can see, we will start with the data from the housing market. So housing starts in 4 hours and 15 minutes, but in 6 hours we'll have interest rate decision, rate statement, monetary policy report, and 15 minutes after this we'll have a press conference from Bank of Canada. So definitely volatility on the Canadian dollar will be higher. We should expect higher volatility. In addition to that, in 10 hours we'll have FOMC minutes. Definitely important for the American dollar. So far we got imports, exports, trade balance data from Germany. I will show you why this data was important is because of the data from the previous 2 days. Actually, I need to show you filters. Oh, sorry, okay. You have to wait a little bit. All right. Yes, I wanted to show this industrial production data. Unfortunately, here is labeled with one exclamation mark, but it was a huge data. Yesterday, industrial production from Germany, because the miss was very big. Like we were expecting 0.3, we got minus 1.9, almost minus 2. And this increased the worries about the slowdown in Germany. And obviously Germany is the biggest economy in Eurozone in Europe. So that raises concerns about whole Eurozone, and Europe is the slowdown coming well faster than anticipating. So after this data, we are closely looking at the data about trade balance, imports, exports from Germany. But well, the difference was not big, so we don't have any volatile movements, significant changes on the euro. I think this data should be labeled as much more important than it was labeled here. But okay, it's at least you know about the outcome of this. You can see also we got unemployment data from Italy, bigger than expectations, smaller than the last one. Unemployment is still a big problem in Italy, and with economy slowing down, it can raise some concerns again. This is the calendar. As you can see, we need to focus traders trading on the Canadian dollar should be extra cautious now. Other than that, we should be fine with the volatility. So let me show you the charts. Let me analyze the markets from the technical point of view. And we start with the cable, British pound to American dollar. As you can see, this double bottom formation is shaping up. So for the proper signal, what we need to see is this breakout of this, let's say, orange line to make it different from this blue area. Why this blue area is important? Well, look, it was a resistance here and here, support here, here. So the fact that we are above the blue area is significant for the buyers, especially that it was proven here. As you can see, it was proven overnight as a support because we got a bounce here. And the thing is that as long as we are above the blue line, there is a positive sentiment, but there is no buy signal yet. In my opinion, we need to play it safe, and the buy signal will be triggered when the price will break the orange area first. So for the proper trading signal, we need to see the breakout of the orange resistance first, and this is my view on the cable. Next one is New Zealand dollar to American dollar, which you can see is breaking this red line, and actually this red line can be considered as the upper line of the wedge formation here, and the breakout of the red line will be a signal to go long. So an upswing, wedge, an upswing. That is the probable scenario here. Again, I was playing short here. I closed my position with a small profit, but I was expecting more from this. But the price reversed sharply, as you can see last week. V-shaped reversal. V-shaped reversals are usually pretty strong, and they give signal in the opposite direction, and this is the signal in the opposite direction. Here, signal to go long. Euro to British pound now. Euro to British pound, there is a sideways trend here below the resistance and above the support, and we are waiting for the breakout of either the upper green line or the lower green line. Hey, I'm sorry, we are back. So Euro to British pound, we need to for the trading signal, we need to see the breakout of the either horizontal resistance here or the horizontal support. So far we don't have a as for now we don't have a signal. On the Canadian dollar to Japanese yen, we do have a continuation of the upswing, and this is the beauty of the price action, because look at this is the false breakout below the horizontal support, and it was not an ordinary support because that was the neckline of this head and shoulder formation, so a left shoulder head and right shoulder. So all the sellers that were fighting for this head and shoulder pattern, they were believing in this head and shoulder pattern, they were selling here during this flash crash. Those orders got activated, but the price reversed, and those sellers were left with the losing positions, and the price came back above the support, and stop loss orders for those traders were here, so it got activated, and you can see the proper reaction after the false breakout. So false breakout, fake breakout, fake activation of the head and shoulder pattern, and after this we have 4 bullish days in a row, strong upswing. I would love to enter with a long position here, but the thing is that the risk to reward ratio here is bad, and I always look at the risk to reward ratio, so preferably I would love to see the reversal here, test of the green area, then a bounce from the green area, and I would see the bullish candle here, for example, the bullish pattern like a hammer or a bullish angle thing. It would be easier for me to enter, so buy, for example, after the hammer. Stop loss would be much closer, so the risk to reward ratio would be much better, because on hourly chart, look, it's very hard to estimate where the stop loss should be, because you can enter with a long position here, stop loss should be can be here, right? But the price can go here, will even go to those levels. It will not mean the cancellation of the buy signal, because the buy signal will be present as long as we are above the green line. Okay, fair enough, so you can place your stop loss order here. But look, then the risk to reward ratio is bad, because the potential profit is the same as the potential risk. So it makes no sense to enter the position where you have risk to reward ratio equal 1. You should always aim for the positions which are which give profit potentially 3 times bigger than the potential loss, or 4, or at least 2. Bitcoin. So as for the direction, yes, Canadian dollar to Japanese yen, we should see a proper upswing here, but that's only the direction. So, but trading wise, you need to look on the risk to reward ratio, and in this case, risk to reward ratio is not desirable. Bitcoin is still in this pennant formation or reverse head and shoulder formation, if you will, if you're a buyer. So left shoulder head and the right shoulder. Breakout of this upper line will give us a buy signal with the target on the yellow area, and the breakout of this line will give us nothing. Breakout of this line will give us a movement towards the orange line, and in my opinion, only the breakout of the orange line will give us a sell signal. In case of the sell signal, my target is below $3,000. It's $2,900. We were almost there here. Why there is my target is there? Because it's a resistance area from 2017, and it's also support from September 2017. So you can see that this line, this orange line, is pretty important. And yes, this is another resistance here. So before going to the yellow area, the price should challenge this blue line here, obviously in case of an upswing. Oil is having a nice reversal for the past few days. Oil started this year on the front foot, but obviously they have still I don't think that those fibos are needed anymore. I think they still have a lot of dollars for the correction movement, because as you can see the slide was pretty impressive. So actually we should measure the fibos from here, and now we are on 23.6, and it is an important resistance because it was a support in November and December. In case of a breakout, the next target will be 38.2. Obviously 38.2 is always important. So this is the situation on the oil. Now American dollar to Japanese yen, which is having a bullish correction. There is a downswing, there is a bullish correction. We are aiming 38. We were aiming 38.2. Now we are aiming 50. With this correction, I think we can go as far as to 61.8. Mm, 61.8, and yes, basically the situation on American dollar to Japanese yen is let's say complicated, because we are exactly in the middle of the symmetric triangle, as you can see here. Downswing, well, downtrend line, uptrend line, and the price being exactly in the middle of the symmetric triangle is the worst place to be. That's not the place where you make millions on the market. In my opinion, you should wait for either the breakout of this line, or a bounce from this line, or breakout of this line, or a bounce from this line. So basically, price being inside is exactly in the middle of the symmetric triangle. That situation is not tradable for me. So I would leave American dollar to Japanese yen. But from my experience, I would say that this is not a reversal. This is rather a correction, and should be flat, and eventually we should get another leg down. Gold is approaching to the end of the pennant. This is the place where we should finally decide if we want to go higher or we want to go lower. In my opinion, I will repeat this. This is 1 year, 1 year, 1 year, and let me show you this. This 2000. Let's go to the beginning of 2018. It's here. So we start 2018 here, and look, for 1, 2, 3, 4 months, the gold was higher. So that was the beginning of 2018. Beginning of 2017, upswing. Beginning of 2016, upswing. Beginning of 2015, we had upswing till the end of January. 2014, upswing. 1, 2, 3, 4, 5 years in a row, we had an upswing at the beginning of the year, which brings us here. We are at the beginning of the year. We should have an upswing on gold. Why? Because history loves to repeat itself. This is why. So as you can see, we dealt with the last important Fibonacci, which means that this correction is over. Actually, I can remove all those lines because we shouldn't get there in the nearest future. We should climb higher on the gold. So here, here, here. But this is the ultimate resistance at the moment. And what I would also love to show you is this line that we are above. Uptrend line here, we were below, that was used as a resistance, but now we came back above this uptrend line, and we should see the further upswing here on gold. So in my opinion, we should see the breakout to the upside and the test of $1,307, which is the ultimate resistance for gold, because it was with us not only here, but if you move this line, it was important, and I do remember this. It was important since the 2016 in May. Even further, guys, 1,307, around $1,307 for ounce is super important for gold. Look at this, 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 this. So this is the place where we can stop, where the upswing can stop. Okay, here. Okay, I need to adjust it to here and here. Let's make it more accurate. Yes. So we see we didn't get there. $1,307 for ounce. This is the ultimate target for gold. I think that the gravity, the importance of this level will pull the price higher, and the buyers will eventually get there. Next one, Euro to Japanese yen. First time in this week. What I wanted to show you is that the price is now testing this super important support, which after the breakout is being tested as a resistance. We tested that once, we tested that twice. If you believe in the further downswing, this is a good place to go short because of the risk to reward ratio. Unfortunately, there is one bad thing as for now, because you don't have a bearish price action. So this price is not showing a willingness for a reversal. This price is still showing the willingness to push higher. So there is a good place to go short, but the price is not showing a willingness to go short. But it looks, the place alone looks interesting. Australian dollar to New Zealand dollar. Here potentially, what do we have here? This can be a false breakout. This can be a false breakout of the horizontal resistance and a false comeback inside of the triangle. And this can be huge because if it's a false comeback above the triangle, that is a super strong sell signal. On the H4 chart, those candles are very negative. On the H1 chart, I think this will be a nice to look at H1 chart. Because we do have a breakout of this uptrend line, but now the price is pushing higher. But this is a H1, so this is a day. So in my opinion, like price closing a day close to the daily lows, so below the green area, price closing a day below the green area will be a strong sell signal. British pound, Australian dollar. Here I wanted to show you interesting setup. Look at this. Left shoulder head, right shoulder, downswing. Left shoulder head and right shoulder upswing. Left shoulder head and right shoulder downswing. So this price respects head and shoulder patterns. Here, left head and shoulder reversal. And with this, this is interesting because now we are testing the neckline as resistance, and my opinion price closing today somewhere here near daily lows will be confirmation of the sell signal, and that can be an interesting selling opportunity. Euro dollar now. What we have on euro dollar is the breakout of the downtrend line, and now we are testing this downtrend line as a we tested this downtrend line as a support. The test was positive and the price reversed, but we are still above this green area, which is a strong resistance, especially recently here, and as long as we are below the green resistance, there is no buy signal. But the buy signal, nice buy signal, will be created when the price will break this red line and the price will close a day above the green area. Price closing a day above the green area will be a strong buy signal. S&P 500, this is a nice setup. Not yet, but possibly can be a nice setup because price getting to the orange area, which is an important support 3 times, 1, 2, 3, and price creating a reversal pattern will be a good signal to go short. As you can see, the yellow area didn't act as a resistance, so if not, fair enough, we will not force ourselves to trade it. We also do have this correction equality pattern. Okay, if the correction equality pattern does not want to work, fair enough. So now we are left only with one resistance here, which can bring us a further downswing. So the bearish price action here, like a shooting star, bearish engulfing on the gray area, will be a nice signal to go short. DAX is approaching combination of dynamic resistance and horizontal resistance, and a bearish price action here on this green area and black line will be an invitation to go short. Dollar index created the flag, downswing. We are witnessing a bearish price action here, and possibly we should see a further downswing. Canadian dollar to Swiss franc, here with the prices kind of similar situation to Australian dollar to New Zealand dollar, as you can see maybe on a weekly chart. Also breakout of this lower line and a test of this line. Here we are breaking lower line of the triangle pattern, and we are testing it as a resistance. So it's the same. The price came back above, but is now reversing. But so far we do not have a trading signal. We will see how this situation will develop. Australian dollar, euro to Australian dollar, in my opinion, that is a good selling opportunity, but I'm just waiting for the proper price action So the prices on a weekly resistance, which are highs from 2015, 16 and 18, and we made this major reversal with this weekly chart, but I'm waiting for more confirmation here. So this pennant, well, this pennant did not give me any significant, any proper result. I think that the breakout of the orange support can be significant in this case. American dollar to Swiss franc, we are very close to a major sell signal. We're supposed to have a bounce from this line, but we are not having it. The price is on a horizontal support. Okay, this line here. We need to adjust the support better. So we are here, price can bounce here, fair enough. We can have a bounce from this line, but the breakout should bring us a sell signal. Euro to Swiss franc, I am looking forward for this pattern because I would like to see the bullish price action here in a further upswing, because on a weekly chart we do have a resistance after the breakout, support. So there was a double test, there is a double test, but what I'm missing here is the bullish price action here, right? So there is a potentially nice place, but there is no reaction. Bullish price action here will be present. I will be able to see a demand when the price will break this blue line. As long as we are below the blue line, I don't see a trading occasion here. And the last occasion is Australian dollar to Swiss franc, where this reversal was, I think, the strongest one. Also, the place is important because it's a horizontal support marked with this green line, and we also broke this midterm downtrend line. After the breakout, the price created this correction, but is now recovering after this correction, so it's quite positive. And if you believe in this setup, it's quite okay. It looks promising. So guys, that's it for the daily analytical report. We have few interesting setups. For most of them we have to wait, but it's always like that. Patience wins the day. And thanks very much for watching. In the meantime, visit our Twitter account and our website, alpari.news, and our YouTube channel and our Facebook. So thanks very much, all the best, and see you in half an hour on our educational webinar.